Good afternoon, everyone. It is just about 18 minutes after 12. Happy New Year. It is Tuesday, the 6th of January, and this is our first session back since the holiday. And I want to welcome you to another edition of Chart the Markets. And this is a great day to be doing this because there is lots going on in the market, as you guys know. And I think it's time that we maybe take a moment and start with the 10-year, the US 10-year. And there's a reason, and it's a chart that we haven't talked about in a long time, and we're going to get to crypto, we're going to get to all that other stuff, commodities, stocks, we're going to get there. But I want to show this chart just for a minute. And what you see on this chart, a couple things. This is our script, obviously, right? And we're running our T line within it, 5 EMA and all that stuff, and it's giving us our buy and sell signals. This is a monthly chart of the US 10-year yield. And this amber line is the 1000 MA that you see on our charts, and then this pink line is the 500 MA that you see on our charts. Okay? Why am I showing you this? Well, we have broken back in early 2020, mid 2020, I guess, a 40-year downtrend in interest rates. Some of you may not have even been born when they were, when that whole top started, right? But we have broken a 40-year trend in interest rates. And we work off I don't want to say presumption because I don't believe it is, but we believe that this is a language and that current price looks for past price. So after that 40-year downtrend was open, again, this is the monthly chart, right? And this down here was the low. Where does price want to go once it starts to move higher? It's going to look for the other levels, right? Next, break one level, find the next. We know how the drill goes. This back here, and if you've been looking at my charts for on the 10-year, these goes back a long, long time. This up here is just a kind of a double toppy area that we pointed out, and it occurred at 1,000 days of price history. Double top at 1,000 days of price history. And we understand, right, that when you have these long-term averages, they're telling us something because they represent such a long period of time. So when you double top at 1,000-day SMA on a monthly chart, is it really 1,000 days? No. It doesn't represent 1,000 days anymore. It's a representation of 1,000 days over that period. So in this case, 1,000-day MA on a monthly chart is over 83 years. That's the amount of time that's compressed into that level. That's a long time, right? When you translate the average over the period, that's a long time, and that's strength. Like it's meaningful when you fail it, just like it's meaningful, like in oil we've demonstrated a million times, where we were telling people, if it fails 1,000 days MA on the daily, you have a problem. If you fail it on the weekly, you have a bigger problem. If you fail it on the monthly, well, it looks down and to the left. But here we have this double top, which I want to point out to you. And this again is after the break, right? So this is all part of this big move down. The fact that the 1,000-day MA, which is representing 83 plus years, 83.3 or something like that, is telling us something. There's a message in a bottle there. That's the market telling you, you know what, I think I'm going to kind of continue south. And that's exactly what it did. And then you get a buy signal. And remember when rates were going up, nobody wanted to acknowledge how high they could actually go? Which is understandable, right? Like, they've been extremely low for decades and decades and decades, and then they start to creep higher and nobody wants to talk about it. I get it. But what do we know? We know that current price looks for past price. Now, obviously, I've left the 20 and the 50 and a whole bunch of stuff off this chart. But we're trying to demonstrate something here. Do you notice how we get our buy signal in and around that all-time low? Just coming out of it. Did the divergence between the T line and the 5 EMA break on the way up? No. What was the target that we had? Was roughly 5%. And that's where we went. 5%. Did that seem absolutely insane when rates were essentially zero? Probably. I understand that. I'm not an irrational person. But what's more rational than people? The chart. Because it represents what money does, not what people say. And the 10-year yield popped up to 5%. So the reason I'm showing you this is because once it hit there, everybody was believing, well, hey, you know what, rates are going to sink. Right? The administration's working to they want the 10-year down, they want the dollar down, they want oil down. Okay? Which is fine, except that's a bit of a magic trick. And every time they've talked about, or they actually did lower the rates, the 10-year went up. So here we are, and what you see, these lines have been on this chart forever. This was just a series of trend lines that I drew on here, and you know what? For the sake of simplicity, let's just take them off. We can kind of see what's going on. We are a hair away from catching a buy signal on a monthly chart. Is this not a target? Yep, we show it every week on all different time frames. Is this past price level a target? Absolutely. The wick of it here, and so I like it wants to come back. So I'm showing you this because right now everyone's saying rates are going to fall, and they very well may. But when you look at a long-term chart of the 10-year, it still feels like there's a little bit of unfinished business. Now, this is the daily, and you can see that 5 looks a long way away now. Back in here. So, although it looks far away on the daily, it is not all that far away in reality, right? But all we're trying to do is mitigate risk for ourselves and take advantage of opportunity. Does this not look like, there's been a bit of consolidation here? Absolutely. And we know that we have price is attracted to past price. The weekly shows us quite clearly, and again, I'm only using the long-term averages here, but it shows us where the downside is, right? On this weekly chart, current price, if it rolls over, is going to look for past price until it finds support or an influx of money to come in and change the direction. The upside is, now you do have your buy signal on your weekly chart, and these red candles have proven, at least for now, that they are simply red candles in what appears to be an uptrend. So again, just another reminder not to be fooled by things that you don't think can happen because they seem irrational. They can. And it's when you're not expecting it that they often do. All right, so I don't think this 10-year's done, and I don't think that the dollar seems to have something to say about itself too. It looks like it might want to break out here. It did produce a buy signal back on Friday. This is a range that we've had for quite some time, and you can see how prices sort of boxed itself in. Where will it want to go? Look for where it's been before. Break one level, find the next. I know that's repetitive, but it kind of is our reality, right? We have to just keep looking for these levels. They're helping us determine where price is going to want to go. Do you guys remember this chart from last week? We were talking about the NAS 100. Right? So, we drew this trend line as soon as we could connect this level. And at least today, it actually wicked that level. It hasn't broken through, but it did produce a buy signal. I'm very interested to see how this plays out, actually. There's our weekly. The weekly, as you guys can see, is still a bullish chart. Right? And if you take away one thing and use it regularly, just, use this methodology to help you understand trend. Right? Like, it's great to be able to read price. That's wonderful. We all want to do that, and it's critical. But when you overlay the ability to understand the trend, I think you'll find that ability to read price much more valuable when you can combine the two. Right? And this is what we use to help keep us on the straight and narrow, right? So that we don't make mistakes. Speaking of mistakes, throw the volume profile back in, and our MAs. So everybody remembers our daily Bitcoin chart, right? And do you remember how we were dealing with this 500 MA and it failed, and then treated the 20 like it did the 5? And here we are dealing with it again. Remember how we talked about once you break support, breaching it to the upside in a sustainable way is a real challenge? This is an example of that. Right? Every time you turn around, every one of these moves to the upside is going to be the one to take you to the promised land. Get that stuff out of your head and focus on what's in front of you to keep you from getting there, because that's where you're going to make a mistake. We talked about this, I know, last week before the break, that we would have to see how price was going to deal with the lower value range, and yet again, the 500 MA, and as of now, it doesn't like it. What's our 4-hour look like? Well, did you have a nice run to the upside? Absolutely. Could you manage this trade quite effectively? Absolutely. Although you haven't printed a sell signal, this is your first touch of the 20, so it'll be interesting to see if it gets support or if it does bounce. This could be a continuation move. We don't know yet. But we have 3 options: up, down, and sideways. So since we're talking about down, if you don't hold here, what happens? Well, you see this gap. You'll fall into this gap. That's the upper value range. You'll be drawn to that. Price will be. But is that going to be enough to prevent you from finding the 50 on the 4-hour? Probably not. And you look to the left and you can see all of this kind of, it's actually somewhat structural on this time frame when you're connecting these. That area is acting as support and resistance. So it's also in this gappy area with the POC below it. So this area is all a draw for price. That's the downside. The upside is you bounce here, and this becomes a continuation move. And then what happens? You would look to take out the previous wave's high with this level sitting here as a draw for price. I don't know. This just looks like perhaps it's just hitting a bit of structure and it's got to chew itself up a little bit before it wants to take the next level higher. But that's all you're going to be doing, is that if it does bounce, you're just going to, okay, here's a target. That's the benefit of using these longer term averages. If they aren't here, are you not a little bit lost? Right, like just for interest's sake. Oops. kind of changes the context of things on the chart a little bit, doesn't it? It's nice to know where targets are, because not only are they targets, they eventually will box in a range for price. And that's when a good technician is just like shooting fish in the barrel. But these are our options right now. We bounce here, get a continuation move, take out these highs, target this level, understand that this would be the first touch on the 4 hours, so you would expect a little bit of resistance or a failure, and if it was to fail, it come back down to this level. If it breaks out, it starts looking for the next level higher. This is what I find really interesting, and we've talked about this. This is the weekly. Right now, we talked about how we're getting support here at the 100 MA, and it's not accidental. You can see how it's kissing it. And it's the first time it's seeing it since it broke out. This is what we can expect, or hope to see. But remember how we talked about that this move here isn't necessarily going to be a breakout move. We don't know yet. I think it's very interesting that you breached the T line and then have completely pulled back to trade beneath it. Is this going to be this impulse down? This sideways price action is not bullish, it's bearish. Bullish in the sense that I guess it's not melting down, but I interpret after an impulse down, that sideways price action as not necessarily being very bullish at all. And you can see prices continue to trade beneath the 5 EMA in any effort to test the T line or the 5 EMA fail. This candle is kind of right back at the T line or below it. So is this going to be a failed breakout where you come back, take out the previous wave's lows, and in doing so, you'll end up taking out this 100 MA at this upper value range. Okay, all of these things are actually providing you a little bit of support right now. Right? So if it does fail, this is a failed breakout, comes back, takes out the previous wave's lows, falls into the volume gap to the right, and then from there is not a whole lot to hold you up, and current price will look for past price, which puts the 200 MA within this area that we've identified a while back as being a bench of past price that in the event of a move down, current price may want to sit on. And that's, you can see this shelf here, that's picking up this. And boys and girls, it's not unusual to find the 200 MA on a weekly chart. It's expected, right? But nobody wants to nobody wants to talk about it after you go parabolic and you fan out all of the ranges that you have to come back and test. So this is the chart that I'm really quite interested in, because if this is a weekly failure, then you have your first wave down, slight retracement higher, which then kicks off your second leg down. And there's typically more than 1 or 2 or 3 to a move. So this could literally be just the first slight retracement higher in a continued downtrend. The only thing that will change that is more money coming in, and we'll be able to see that as well. And we just, peel back the time frames in order to see if we can get a different look. This is the monthly. So impulse down. Here's your support from the 20. It's the first time it's seen the 20 since it broke out of it, so it got a little bit of support. But is it going to bounce here, or will it fail and find the 50, which is in that very same range that we identified on the weekly? Right now, this is still in a downtrend. Right? This divergence down on the monthly chart is telling us this is still a downtrend. On the weekly, it looks like we've obviously tested these levels, right? We're looking at how fractals work now. Here's the weekly. We're testing these levels that on the monthly we're approaching. And if we fail on the weekly, what do you think the chances are of the monthly not continuing its downward move and trading below the 5 EMA and the T line? probably pretty good. So, your monthly's trying to hold the 20 while being in a bearish trend under its sell signal with a fair amount of divergence between those levels. The weekly is struggling to break the T-line and has not triggered a buy signal and is vulnerable to the gap below in the 200 MA. And then on the daily, you're struggling to break the 500 SMA and that lower value range. Right, so we're just, again, using fractal analysis to just try and peel back the onion one time frame at a time. Right, the understanding that price just doesn't go straight up and down. It has an ebb and a flow, and it creates these moves of move up, retracement down, move up, retracement down, or move down, retracement up. That's just the ebb and flow of price. But again, that's how we're analyzing the risk. Like, do you want to double down and go long when you don't have confirmation that on the longer time frames that price is changing? I wouldn't. Right? That's not. I want to know for sure what I'm dealing with as much as possible. There's always going to be an element of the leap of faith that you might have to take, but we're trying to make sure that we can increase the probability of making safe, profitable trades. That's what we're trying to do. All right. Let's look at XRP. Because, and again, we're not picking on anybody here. Let's start at the monthly if it's any value to us a little bit. This big retracement came down and hit the 20 MA hard and has bounced. But it doesn't seem to be able to break the T line on that stuff, on that time frame. We peel the onion back and we look at the weekly. What's going on the weekly? Aren't these levels interesting? The ones that we've dropped on quite a while ago? Saying that price will probably want to come back to this level. Why? Because it's been here before. That's why. And here we are on the weekly. What do you got to break through? The 20 and the 50. Is this the first touch? Yep. The first touch. First touches are more likely to fail. And that's kind of what we're seeing here. Or at least on this current candle. Obviously, if next week, if price continues to be bullish or something, and we get a trend change, then obviously it's a different conversation. But right now, you're seeing basically a kiss of the 20 MA weekly and a pullback. What's that look like on the daily? Well, on the daily, we're showing you that we're breaking one level and we're finding the next and breaking that level and finding the next. Now we're actually starting to see on the daily chart that maybe we're softening a little bit here, and this is going to be a first touch rejection of the 100 MA. We'll see. Let's take it to the 4 hour just for fun. All right. You do not think that current price, in the event of a pullback, is going to be attracted to past price. And on this time frame, there it is. 20 MA, 500 MA. This level of 215 that we identified ages ago. And then you've got the upper value range. And then the 50, and then the 200. So this could be a big fade. We don't know. All we can do is use a few of the handy tools that we have in our toolbox. So I just grabbed on the 4 hour chart the swing low, swing high, and drew fibs on them. Right? Fibs, fractals, and filters. The fractals we've been showing you all day, monthly, weekly, 4 hour, daily, all that stuff. The filter, that's what the T line and the 5 EMA are doing for us. They're filtering out the noise and allowing us to have an understanding of trend. These red candles are the noise. This is the noise. The trend is telling us we're all good. That's the filters. Then we look at fibs. So here we are, swing low, swing high. 50% is 211, and then 618, which you have the 50 working its way up to there at 204. So what does that do? Well, now we have a multi-layered system to give us targets We need to have some sort of an understanding where price is going. Doesn't mean that we don't break targets, right? Like this would be the target to the upside. This is a target to the upside. And the advantage of using the system that we have is that as you reach these levels, you're less likely to kind of feel unaware or unsure of what you should do when you get there, because the channel will be keeping you in the trade. Right? So yeah, that was your target. That's where you wanted to get to. Well, you got there and then some. So you're still in. That would be a next level target. You got there and then some. And this is how you allow that trade to run. And when it gets obviously toppy like this, listen, you don't have to wait for a sell signal to get out of a trade you're already in. Right? You don't have to wait for this thing to print before you get out. Right? You've earned this. Paid a little insurance down here, got a confirmation. Is this toppy? Sure. Do you want to let it drop, all the way back down? You may or may not. But you'll just use a different time frame to try and validate what you've got going on within the other time frames. That's all. This is still a very bullish chart. This candle got super hot. This thing could fade back down to 216 on the daily, and then just refuel and take off again. Right? So don't interpret these things as death all the time. This could simply just be a retracement back to, the T-line, the 5 EMA, or you have the 500 in here and you get a bounce. And it just turns out to be a continuation move. And then what are you doing? Well, you're looking for the upper value range on the volume profile in the 200 MA on the daily. So, and that's XRP. So I'm a little bit suspicious of what we're seeing happen here in all of these, all of the crypto stuff we're looking at anyways, with the exception of a few. Let's look at Solana on the daily, and you can see kind of the same thing. It looks like, so what do we have here? So we have a bit of a doji forming at the top of a bit of a bull run. Those should get your attention. Right? That's when you're starting to ask yourself, okay, where's my stochastic RSI running? Well, it's basically scraping its head on the ceiling. So we know that the stochastic RSI can run up at these levels for an extended period, which it has. The Fisher transform is still extended and diverged upward, which is bullish. But the doji makes you wake up. And when you see those things, you can start to analyze, okay, so what's going on the chart I'm trading? I've had a nice move higher. I see this gap up here as opportunity, and I have the lower value range in the 100 MA. This stuff is the next conversation, the 200. On the 4 hour, however, let's look and see what we're dealing with. Sorry, that's the 12 hour. 4 hour. Here we go. What would you hope on the 4 hour, if you're willing to let this play out? Would you hope that this turns into a continuation run, right? You come back, tag the 20, tag that upper value range, boop, and then bounce higher and take out the previous wave's high. That's the upside, right? And then from there, you just look to the next level up. But if it fails, there's a lot of air in here. So if it was to fail, you're going to come back to obviously the 21st, but I think you have to look for the 200 and the 50 on the 4 hour. So the 4 hour gives us a look into what's going on the daily chart. Right, so the 4 hour candles are kind of printing this on the daily. If we move forward, are we not in kind of a similar situation that we were on Bitcoin, where price is kind of moving higher and then struggling as soon as it gets to the T-line? And it's frustrating because you can get 2, 3 green candles and not print a buy signal. But the trend, the message is in the trend. So can you trade those 3 weeks of candles? Of course you can. Knowing full well that the trend is still intact to the downside and that these 2 or 3 candles that you may pick up could fail, and then you'd have to either, wash your trade or go short or however you're going to handle it. But you'll know, even if you're trading these few candles, that you are still working under a downtrend, and this just could be impulse down, slight retracement higher, you roll over, take out the previous wave's lows, and then the trend down continues. Okay, so it seems to be a pretty consistent look on a lot of things we look at. Let's look at Aster, because I know everybody wants to, right? And here you are. We haven't really solved anything. And, this is a little bit of a mystery because this thing did get a lot of hype when it was first launched. A little bit of a buy signal here after consolidation, but again, it's starting to look like this could be a failed breakout. And if it is, it pulls back, breaks the T line, revisits the 20. This would be an example where you hope it would hold, right? Because it would be the first touch since breaking it. But if it does not, and it's a failed breakout, it comes back down and takes out the previous wave's lows. And again, if we look on the 4-hour, we're going to see what exactly, there we go. Like, there's your resistance, the 200 MA. So if you're looking at the 4-hour chart and you see it wicking out and failing at the 200, yeah, this is a pretty clean, is this what's going to happen over here? Like, I don't know. Doesn't look good though. It's attracted to the 50 for sure. And then this point of control, I think it really does want to find it. That's a big red candle. And again, if there's questions, you can feel free to shout them out. What am I looking for? Going the wrong way. We're looking for oil. Here we go. And oil's interesting, right? Because there is all kinds of narrative around oil because of what's gone on geopolitically. But this is why we talk about noise. Isn't all of the stuff that we hear just noise? And the only thing that matters is price on a chart. The only thing that matters is price on a chart. Now, you remember how we talked about at the beginning of the stream, we showed the 10-year yield with the 500 and the 1,000-day moving averages on them. Right? Well, again, this is a really good example of why those things are important. You can see the support that price was getting from 1,000 days on the daily. You can also see 1,000 days on the daily or on the weekly, but that's not 1,000 days, is it? It's actually like 20 years, just under 20 years on this weekly chart. So you're getting support from 20 years of price history. You can see you're getting resistance at 20 years of price history, right? Again and again. So when you fail that, again, everything is fractal, so it's all time frame relevant. When you fail that, what's the message? Was there a message failing to try and go back to the 1,000-day MA? Sure. Just as like there was a message when you failed it. Right? But right now we're under a little bit of a failure situation. This is the weekly chart, right? If you listen to the news or you're going into a space and they're talking about oil, 9 times out of 10, it's upward price trajectory. Well, here we are. These last 3 weeks really just printed dojis for us. And even today's candle, after yesterday's kind of the first trading day after all of this news broke, we're taking all that back. So in other words, I think the market is just shaking all this stuff off. At least that's what it appears. And nothing has really changed in my world. Right? So if I wasn't listening to the news, or if I was completely unplugged from all of that stuff, would I care? Would it make a difference in how I would trade? or how I would interpret what's going on the chart? Absolutely not. The chart's still telling us that you're still in a downtrend. Right? That's the weekly, that's the monthly. Are we trading below the T line and the 5 EMA? Absolutely. Has the divergence actually extended and picked up? Yes. Right now, this is just a little green doji and what looks like a validated downtrend on the monthly. And what's this on the monthly? The 500 MA. Right in line. Where it's been before. And it represents 41 years of price history. Can you understand why current price is actually drawn to past price and drawn to these levels? And it doesn't matter how you identify them. You want to call them liquidity levels. It doesn't matter. I don't care. The fact is that they are draws for price. They act like magnets. Nothing is going to go straight up or down. You have this big downward trajectory. Yeah, you have upward movement from time to time, but it's the trend that keeps you out of trouble. And right now, I still believe that on the monthly chart, that 500 MA is probably in play. And we've hit it many times before. Just like if you want to go to a quarterly chart and we throw up a 200 MA, guess who's in the neighborhood? Now, in order for these levels, whether it's the 200 MA on the quarterly chart, the 3-month, or the 500 on the monthly, or something else on the weekly, price has been here before. And as everything is fractal, what we see on one time frame, we can see on another. We can still validate that price is in a downtrend, right? Look at the divergence. It's still there. So as painful as it is, until these things change, we're still heading in the same direction, which for now is down. And even if we break this level, like we have before, we challenge to the upside, it's the trend we need to break. And oh, by the way, there's 6166 again, the number that we identified way back here in September of 23, only because we were trading above all our major moving averages. And if we break one level, finding the next, price is going to look for past price. And that's where the 6166 came from. Just lining up current levels of past price, or levels of past price, which tops through here, these wicks back in here. That's all we're doing. It's not pin the tail on the donkey, it's just get you close. So you can do your job from there, because you only have one job with this, and that's to monetize the chart. It's not to have an opinion on things. That's somewhat relevant, yes, but at the end of the day, it's what money does, not what people say. And there's all kinds of things out there where people are saying, buy this, buy that, buy this, buy that. We talk about not getting hit by something you didn't see coming. This is what we're talking about. Don't long into resistance. This is why, right? This is why. So many mistakes are made. Like, everybody wants to long into resistance when they're basically banging their head on it, right? That's why we use the system that we have, because it's helping us identify early entries of opportunity. Now, I think we looked before. I don't think we really gain anything from the 4-hour to the daily chart, maybe a couple hours of trading because they fired off quite close together. But is all you have to do. You're coming out here and you take the signal. Again, you don't know what this trade will bring. As far as you know, there's a possibility that it could fail again at the 200 MA like it did all those different times. But this time it broke through, right? Like you don't know what's coming after each candle. You can only go by what's in front of you. In this case, the divergence was there. The price was climbing up these levels until it wasn't. And it's okay when you see those big red candles to get the heck out, right? You have no obligation to wait to round trip everything out of some unusual sense of pride, right? The job is to monetize the chart. So there's, if you're long, that's the signal you buy. And when it gets a little sketchy up here, no one will ever criticize you, especially me, for taking your profits. And if this turns out to get a continuation off the 20, which it doesn't look like it is, it's like we said, it's going to look for this, well, you can get back in. But this looks like the trend is breaking. This is not going to be I don't think it's going to be a re-entry candle right away. So just do what you're told. That's all you got to do. Do what you're told. You can see how you've been trading. Their stochastic RSI was elevated for a long period of time. And, nothing major happens, right? Even though it's crossing up top, everybody thinks, oh, buy, sell, buy, sell. No. It's telling you that the buyers haven't left the room yet, right? Now they start exiting. And you get that kind of waterfall effect. And you got the same thing in the Fisher, right? And the nice thing about the Fisher is it doesn't throw you a lot of signals between point A and point B, right? It'll give you very clean trend moves, and sometimes you get the ones that are extended like this and head south along with this. I'm all in. So I like that. What you want to see is the MACD crack the 0 level on this time frame if you were short. But these are ugly candles. But what we do this live, right? So now you're going to have an opportunity to see, were they right? Was this a failed breakout? Did we break the 5 EMA and the T line, come back to the 20 and 50? Because those are draws for price, knowing this volume of shelf is here. But if this is the failed breakout, did we come back and break those lows? So, these things are on YouTube, they're on X, so you're going to be able to see them whenever you want. But this is why we do them live. Right? And, this is probably, there we go. Just clean this up a touch. So here's your 15-minute Bitcoin chart. Right? So when you get multiple signals on the script, there is stuff working in the background to try and filter out as many of the unnecessary ones as possible. But when you're in a consolidated state like this is, where you have price going essentially sideways, you have to understand that your averages are coming together, and once they've come together, they're more likely to, cross and twist and things like that. So on the shorter time frames, they will fire more frequently, especially coming out of consolidation. Focus on the ones that present divergence to the downside. This one actually gives you a sell signal, and you probably would have started kicking it off in and around here, right? So it wouldn't have been all the way down here that it would have fired. It would have been happening here. But you'd start to see that this divergence down breaking a major moving average. That's a good clue that you might be onto something. Here's the impulse down and sideways, right? Perfect example of that. How do you know that that sideways move is going to continue down? Because you can literally see the trend. You can literally see the trend with your own eyes that are telling you that green candle, look at, you got the T line and the 5 EMA also crossing down through the 50. Right. Well, next candle, red, wicks the T line, tries to break through. Where does it close? Below the T line, essentially right at the 5 EMA, or below the 5 EMA. Test the T line and fail. Right now you've broken the 200. What's it looking for? Did this seem batshit crazy at the start of the day? Yeah, probably. But hello. Is this still a downtrend? Yes. This could probably just be a move down, a little retracement higher, and then down again. I don't know. Right now, that's still pretty heavy selling. And what will this do? Why did this happen? Go back here. Bet you if we tighten it up a bit. See this movement in here and in here? That is what created this volume gap. So that's why I always, I want you to use the volume profile. It's built into our script. But when you look to the left of your chart, when you kind of shrink it a touch, and you can see the significance of that volume gap, like you'll see how it's created, right? This movement higher is what created this gap in here. This stuff is what created this stuff. So when you come back to fail, like here you are, remember, when things are twisting together, the move that comes out is usually exponentially large. And that's what happened here, except to the downside. You can choose not to trust these signals, right? And the longer the time frames, the more true they're going to be, obviously. But you can choose to ignore them. But like if you're long in here and you're going to wait to see what happens and this signal shows up, that's not a wise move. Like you cannot fight. Do not fight in the opposite direction. If price is moving higher, you stay bloody well long. If price is doing this, you stay short. Do not try and catch these falling knives because someone's whispering in your ear that it's a dip. Tell them to shut the you-know-what up and mind their own business, right? This is a bearish chart. Full stop. Right? This doesn't take a lot of explanation. You can't, the trend is your friend. That's true what they say, the trend is your friend, right until the end. This trend is down on this time frame, so downward trend is your friend. I thought this move was going to come over the weekend. I was 48 hours late. But it ended up happening. What do you think it's looking for, guys? It's looking for the 200. All of this big gap, there's fairy dust and air in the candles that preceded that. And that's why price can't do anything but fall through them. There's nothing there to hold them up. All right. So this is going to be interesting. If you don't get support at the 50 and 20, assuming we come back there, then that's going to be problematic. And that's when your weekly chart starts to continuously break down, right? And that's where your weekly chart puts you in this failure area of that upper value range, right? Back and forth, longer time frame, shorter time frame, so that you know what's going on. Right? Like, don't long into resistance. I can't. And I used to be, when I first started trading, man, I used to thinking, oh, I'm going to catch the early move and it's going to go to the moon from here. And I sometimes would get these good entries. But I didn't understand at the time how powerful resistance could be and how price would react to it once it got there. And my lack of understanding of that would lead to, what do you think? Watching this move completely retrace itself, right? And then closing it far too late. Or even getting underwater in some cases, right? Like that's what happens. So just understand as you're looking at your chart, just deal with what's in front of you. We talked about this 500 MA on how meaningful it was going to be. Do you like short-term averages crossing down through long-term averages on anything you're trading? No, it's not a good thing. And here you see the 50 crossing down through that level. And here we are again. So there's a lot to sort out, just like we said a few weeks ago as this was unfolding to the downside. You're going to be frustrated with the process of trying to move higher. And this is where a lot of mistakes get made. And if you have any other symbols, don't be afraid to throw them out. Eli Lilly is something that we used to look at quite a bit. All right, let's take a look at the daily. So we've printed. This is a sell signal. This will be yesterday, Monday. Let's back up to the 4 hour. I don't think we're going to gain anything here because of this consolidation. No. Nope, not really. So it seems like yesterday, a lot of these things started printing sell signals. And notice what's happening today. Right? This is why when you watch news and you hear, oh, Eli Lilly was up 1.64% today. And you're like, wow, that's great. Is it? Because price on a chart is what I'm reading. And reading price on a chart goes beyond just the number that it represents. It's how it's behaving on the chart at different times, whether it's under sell pressure, buy pressure. It behaves differently. And is all we have right here is a candle that's up 1.64% that wicked through the T line and the 5 EMA and pulled back to trade below those levels. That's not bullish. You can be up 1.64%, but if you're up 1.64% and you're still trading below this level, not exactly bullish. If you don't hold here, what are you going to find? The next level down. Are you trading in thin volume? Yes. What does that mean? When there's movement, it's going to cut through these areas really quick, up or down. And the downside risk, as you can see in this big gap, break the 50, and here you go. Here's the 200 down here again, right? It's not an unusual place for price to come back to. But you can see what happens when you go parabolic. It spreads out all your ranges. And it's just a matter of using the handful of really good tools that we have in our pickup truck to help us interpret the language of the market. This is kind of looking a little double toppy, don't we think? You got these two equal points in price. You know, when is it a double top? You'd have to break this channel down here, but you know, it's something that we watch. We look at the weekly. Still a bullish weekly chart, although we have a red candle that wicked the T line and moved higher. It didn't break down as of yet. But what's the downside risk? It does roll over. You have the upper value range and then the 20 MA. Fail one level, break one level, find the next. Break that level, you'll find the next. This is the point of control, that thin red line. And price is always, even though this is a big move, or would feel like it's a big move, price always seems to be drawn back to the POC levels. And then of course you can see here on the weekly, there's the 200 MA kind of creeping up into a range that would be in play. And I think we talked about this last week, like whatever you're looking at stock wise, pay attention to where some of these things are on their weekly charts. This is Apple, weekly chart. So what's happened? We've come back. Is this the first touch of the 20 MA? Yep, here we are, hoping we hold. Now we're starting to spit or print a little bit of a sell signal. But this also could be a continuation, right? So this is why you have to be careful. You don't want to be wrong. It's probably why a lot of people say don't short Apple. Here's the monthly. On the monthly, would it make sense to come back and tag the 20 like you did here, 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 and here? Yeah, why not? Pretty appropriate and acceptable thing for price to do. And one of these times, it'll come back, it'll fail the 20, And it'll have to come back and see if it can get support from the 50, wherever that happens to be at the time. But what's interesting up here is you still have some really light volume that's all grayed out. And then, an upper value range that sits at, well, this is the monthly, but still 146 bucks. Look at the weekly. I think the 200 is more plausible right now. But where's 146 bucks? On the monthly? How about how about the POC on the weekly? So that's not outrageous either. They may appear outrageous visually, but technically they are not. And the only thing that prevents that from happening is just money coming in to reverse the trend. Let's look at NVIDIA. Go to the daily. Still bullish move that we're currently under. But, it's interesting. You have these red candles that don't break trend. So the divergence is still intact. None of these red candles closed below the T line, nor did they close below the 50. They all held either the T line or the 5 EMA, at least so far. This divergence still being open suggests that the buyers haven't necessarily left the room, right? There has to be enough of them to keep that divergence open. Otherwise, it would be selling, right? And it would reverse the trend. So 3 choices, up, down, and sideways. Here's a representation of sideways getting support from the 50 MA on the daily. Downside risk, you fail and you come back to the 20, and that's the POC. And down here, you see that red level. That's probably the 200 at the lower value range. So if you break down, that's all in play. However, if this holds and then you break out, sometimes you'll see that kind of impulse up, right? This is the reverse example of what we showed earlier to the downside. But you have this impulse up, and then you go sideways without breaking down. Often indicates or suggests that the buyers are hanging around and they want to try and take another run. Right? This is just kind of taking a bit of a break. Those are the options. The 4 hour. Okay. So you're still under a buy signal, and this chatter on the 4 hour, which we saw kind of on the daily, is pretty clear. We'll see what happens, because as we get close to the 20, this is where something's going to take place. It's going to take place after coming out of this consolidation, likely at a major moving average, which in this case is the 20 MA. And it's either going to pop, and if it does, right, so we'll monitor your trend and momentum indicators. But if it moves to the upside, you're going to start looking for previous waves highs. Right? Automatically, this is a level. And then, of course, up here, if it fades and starts to break down, coming back to the 200 and the 50 here, that's a significant draw for price while they're tangled with the point of control. So keep your eye on that. But those are your options. And the only reason we break them down as up, down, and sideways, because that's what you're going to deal with on any given day. Consolidation, the acceleration up, and then the exhaustion. The up, down, and sideways. Those are the basic 3 things you're going to encounter each and every day. Some of the weed stocks we talked about, I try and warn you guys, try not to, this stuff just looks like it's fun to trade, but once you're in it, you're like, why did I do that? Right? It can be a bit of a nightmare. And here's the daily for Tilray. Why did this thing pop? Simply because of things in the news. Right? But at the end of the day, look how the charts come back. As crazy as this chart is, Yeah, I'm going to take it from down here. And I'll even use this crazy wick. What did we end up doing in the end? So if you think that, that's your high off your daily, and you draw fibs on it, it starts to give you an idea, okay, an acceptable retracement. I'd love a 50%. That would show me there's some strength there. 618. Sure, obvious. It's a place that price likes to go, so you're looking for that. And you could be short up here. Why is that candle, that green candle, a problem? Look how far away it is from the barn. The horse doesn't like to get too far away from the barn. Well, the candle doesn't like to get too far away from a place that it's familiar with. The T-line, the 5 EMA, the 20 EMA, there's different ways we rationalize it, but this is what's going on here. All of that air has to get sucked back up, and that's what happened. You came back and you ate up all that air. Right? Now you're trading below. There's your signal. And where does price go? Well, there's your 50%. Now, if you're short, you've broken the 50, you've broken another 500 major moving average, and you're sitting at 50% with the divergence between the T-line and the 5 EMA still open, suggesting that the trend is still down. There's 618. And this is how you guide yourself through the trade. It's just a walk on the chart. That's all you're doing, just going for a walk on the chart. And I understand this is a daily and it can feel like a long walk. But when you're on the right side of it, you're probably going to be okay with that. Here we are. We've come all the way back and completely reversed this whole thing. So if you're short, you're using your fibs in this case to help guide you level to level. You're using your MAs to help you understand if you're either getting support or not. And you're using this channel, and of course they also give you targets, and you're using this channel to help guide you through the trade. It's as simple or as complicated as that. It's just what feels intimidating at the beginning is just kind of overlaying all these different little rules and when to apply them. But as volatile as this chart is, it behaved exactly as you would expect it to behave. And here you are back at the 200, failing the 500. This is kind of a head and shoulders looking thing, but you fail here, you break the 50, you come back to the 20, you fail the 20, you're breaking one level and you're finding the next level. And that's what happens. Now, just for fun, let's look at strategy. Now, this is a chart that we looked at ages and ages and ages ago, and we extended this line off the 1000 MA daily because just as a kind of a quick representation as where things might go, and we've left it there. Everybody was all excited last week. But what's really going on? Like, calm down, people. Because all you did was printed a doji at resistance, and then you got smacked in the head. Have you not seen this a million times? Right? Test fail, test fail, test fail. Don't effing long into resistance. I don't know how many times. And don't try and trick yourself into longing into resistance, because here's you got a daily chart. You can see where your resistance is on this little green doji. Don't drop down onto the 15-minute to try and long it to justify what you're doing. That's insane. And I know a lot of you do it. But stop. Right? You're not helping yourselves. The trend is down. Longing into resistance, we know, is always problematic. more often than not, dropping down to a shorter time frame to just try and rationalize a smaller trade isn't helping you. Find a trade where the trend is on your side, right? You shouldn't be longing here. You should be preparing to short. Or at least doing the homework. There's the 1 hour. Like, you know, this thing, when it started to roll over, it wasted no time. Is this not a failed breakout where current price is going to do what? Come back and look for the previous wave's low. Go to the weekly. Remember this? So the 1,000 on the daily is kind of showing here as the 200 on the weekly chart, showing us that that fractal analysis is proving consistent on different time frames. Remember us circling this? Current price is going to look for past price in the event that it breaks down up here, because what did we say? If it broke the 50, there's nothing here for it to grab onto except for this bench of past price. There we go. We're going to see a big volume gap. Where did this volume gap get created? It got created back here. What was going to happen when you came back to retest that parabolic move to the upside? You were going to get, quite likely, a parabolic move to the downside. This is called trading, folks. This is how we do it. Forget all this other people talking bullshit about what they think price is going to do because someone has an idea on any given day and they might sit in the White House, they might not. I don't know. It's all nonsense. It's all friggin' nonsense. Current price revisits past, break one level, find the next. I don't give a shit if you're going up or down. That's what's going to happen. It's as simple or as complicated as you want to make it. It's not that hard. All you guys can do this and do it well. Here's Google weekly. Let's go to the daily. What happens when you go parabolic? You blow out all your ranges like a big fan. And what happens when you come back and revisit that stuff? It hurts like hell. But it is not unrealistic. These are completely acceptable technical things to happen on your chart. Just because it looks extreme, the retrace and the pullbacks, doesn't mean that it won't happen. And I think for me, that was one of my biggest challenges, was seeing things on a chart that didn't look plausible and then all of a sudden becoming reality. How did that happen to me? Because I was getting hit by stuff I didn't see coming. Now we're using a fractal analysis to make sure that happens less frequently. Right? Let's look at Tesla. What's going on? You guys know. You don't need me to tell you. You've broken one level, and you've found the next level. And you've broken that level, and you're looking for the next level. Yeah. Which is going to be maybe the 200 MA or this upper value range. Now, the probability of price, once it falls into this gap, of finding this level in here or the 200 or the upper value range is it greater or lesser? Greater. Does this 4-hour chart give you any indication of what it might be looking for? Yeah, the 200 MA. Look at the divergence down. Did this fake you out? Did you think, oh, it's over? No. Don't long into resistance, boys and girls. That's why. Price is now looking for the 200 on the 4-hour. And it looks like, in all likelihood, it's going to find it. It's the first Yeah, I guess it's still the first touch of it, so you would hope it would get a little bit of support. But if it does not and it fails, what happens? You break one level and find the next. Now, just like on the Google chart, right, when we just showed you a second ago, is it feel or look like that's a tremendous amount of money to give away in price? Yeah, it does. But it is not at all impossible or irrational for it to come back on a 4-hour chart and check the 200 MA, or on a daily chart to check your 200 MA. What's the job in doing this? Monetize the chart? Identify opportunity? Yeah. Break one level, you'll find the next level. Current price will look for past price. As price was going up here, was it breaking one level and finding the next? Yes. When it broke the 200, is that our most basic bull bear indicator? Yes. Actually broke a whole bunch of stuff here, but yes. Did the chart guide us on the way up? Keeping us out of trouble, filtering out all of the red candles that are just red candles and what turned out to be an uptrend. Yeah. And was it looking for current levels of price to take out on the way up? Yeah. And then what happens once you get past that? You're in pure price exploration, right? It's pretty hard to look. You can draw you can draw a trend line and try and capture a channel, which may or may not be accurate. But I mean, from that point on, it's pure price exploration. At this point, because you're trading above all of your major moving averages, what do we tell you to do? We tell you to look over your shoulder, right? We tell you to look over your shoulder so that you can determine whether or not you need to get off that rocket ship. Or, more appropriately, is it time to monetize the chart to the downside? Well, you're printing on the 4-hour chart right now. You're just starting to print a sell signal. So you can see how price struggled with the point of control, breaking through it, tagged it a little bit up, or the upper value range up top. But you've got the 20 and 50 kind of twisting together here. So you're going to see coming out of this is going to be a significant move. The downside risk on the chart is what? That volume gap, the 200 MA, the lower value range. Upside opportunity is that it holds and bounces in and around these major moving averages, and then starts looking to take out the previous wave's highs. Right? And again, you just keep working your different time frames, both up and down, so that you can get an idea of the range and area that you're trading within. Let me find. What am I looking for here? Yeah, just bear with me, guys. I'm trying to find a chart that's going to give me the example that I want, and I may not get it. So what's gold doing? It's basically doing what we just talked about, right? Coming back, riding that 20 MA, tagging it up, and it looks like it wants to move up and take out the previous wave's highs. On the weekly chart, it's completely bullish. Like, you don't see any real hesitation, just this, I love this. Big move up, sideways, trend holds. Remember, like we showed on that other chart, the trend holds sideways, divergence stays in place. You come back to the 20, and what happens is like a springboard, right? This is where you were either going to drop or pop. It popped. And this trend for gold is still intact, and it looks like it wants the highs. Silver, everyone's talking about silver. Same thing. So now that you've seen 1,000 of these charts where price goes parabolic, and you're trading above all your major moving averages, and this silver chart may still want to move higher along with gold, so it might not be the best example. But what it does illustrate is once you're trading above the 20, the 50, and the 200, right? That's when you're trading above the three amigos. At some point, you're going to come back and at the very least, touch the 20. And when you see parabolic price movement like this, there's a little more to the opportunity than just a retrace that tests the 20. It could come back, test the 20, and if it was to fail, then you're into a real momentum move. You might just have to be satisfied with a touch of the 20 that bounces and turns out to be a continuation. But that's okay because you're indifferent to price, and by that time you've recognized that the opportunity is now to buy that up, is to buy that continuation. Right? So don't be worried that you've longed and shorted the same thing and the same asset in the same month. That's okay because you're indifferent to price. You're not married to it where you can only go in one direction. All right. What else did we? Let's take a look at ETH really quick. It's showing us the same little bit of hesitation, isn't it, with this doji? And if we back the 4 hour up, you're always hitting your head on something. There's always something there 9 times out of 10 that you're getting some resistance on. And here you go. Right at the 500 MA on the 4 hour chart. This is another example of you've had a great run higher. Where would you expect to get some resistance? Major moving average that you haven't touched yet. Right here you broke it, breached it a little bit and broke it. And this is the first touch. And it was always going to be your resistance to the upside, right? It always was going to be, right? You're coming out of the consolidation, your goal is to break through the 200 and target what? The next level up, which happened to be the 500 MA 4 hour. And, there's your next candle. Still a bullish wave, like the divergence hasn't broken, right? You kind of wicked the lower level here and moved up. That's bullish, but, you have to be suspect of the candle and be cautious. This could just be a situation where you're going to get a little bit of resistance before this continuation moves on. But it's also an example where you have to be very careful longing into that resistance. And unfortunately, so many use too much leverage over too short a time frame, and they try and go long in these situations, and then they hit resistance, and the retrace will either stop you out or wash you out before you can spell your own name. So just another reason why you want to be careful longing into that resistance. Major markets look like they want to run today, and we'll see for how long. This is our NDX chart that we looked at, and we had a line, trend line up here, I believe. This one. And you can see where we're, we drew it over here on the daily as soon as we could kind of connect that second or that first lower high. It's interesting to watch where these trend lines are helpful, but not necessary. You're not certainly going to go all in because of a trend line. But it is interesting to see where this resistance is showing up, right? And it's just another little tool we have to try and give us an idea of whether we're on the right side of the trade, kind of like this, right? Where we drew this trend line here, right? At our second lower high. And, was it respected entirely? No, not at all. But I mean, it was respected extremely, very, very strongly. Like this little doji here, where did it close? Right there at that line. So there's something to them, but you don't want to hang all of your hat on it. Okay. Any other things you guys want to look at all today? Mike, KP, anybody? You're more than welcome to chime in before we close off. But this market went sideways, or at least some of it did, really fast. And nobody likes when that happens, right? USD JPY. It's interesting. You can see this is the upper value range on a weekly chart of USD JPY, JPY being the Japanese yen. Right? You can see you got your sell signal quite clearly. You played around with the 50 MA, right? So you broke one level, you found the next level, but you never broke trend. Even this red candle that came back to check the 20, like literally to the penny, did not break trend. And basically provided the slingshot to push price above the 50 in the next candle, and then it hasn't looked back since. It's still moving higher. Obviously, this is a level of resistance up here, so it'll be interesting to see what comes next. And you can see by the stochastic RSI, it's been running hot for a while. So if it takes a pause, remember it's just going to come back, find the next level. First touches typically get some support or bounce. This has been hit a couple times, so it'll be interesting to see what happens. But if it fails, you know where it's going. There should be no surprises when you understand where these levels are and how price likes to come back and use them as areas of support and resistance. This level here is structural. As you can see, it's quite relevant, and that's all that represents. So, all right, guys. So if that is it for today, I will sign off, and I will see you guys on Thursday. If you're not a member of our Telegram group, you're very welcome to join. There's no cost to join. There's a link, should be in the most recent post for these streams. And also check out the no KYC exchanges that we use in our group. There's a promo right on now with WeX, and they're all geo-friendly and they're all no KYC. And they're listed in the at 420 homepage, of course, as well as they're in our chat group. So let's get back to this on Thursday. I do have some other news, by the way, and I wanted to share. And one of the things I've struggled with is getting this script that we use working on TrendSpider. And I will show you in our next stream. There's still a few things I'm working on, but this script now works on TrendSpider. And I've been able to, because it's a little bit different programming language, there's some things I've been able to tweak in it. For example, there's a feature within it on TrendSpider that allows you, it's kind of like a mode selector, and what it does, it adjusts the sensitivity of the filters that I'm using in the background to filter out false signals, and it will give you either a very conservative signal output, a balanced signal output, which is typically what you would see on this chart, or one that's aggressive, and it will reduce filtering in the background, but it will produce more signals. So that's one of the tweaks that I've been able to make, and I should be able to show it in the next stream. So thanks everyone for showing up. You're going to find these streams on YouTube and on X, and if you get a chance, please like, follow, and subscribe. Thanks again.